G'day and welcome to this week's market update for you. What are the property markets doing across Australia and here on the Sunshine Coast as well? Thank you to Michael Yardney. A lot of good information he's always sharing about the state of Australia's property markets, and this is what we're going to talk about today. So you probably hear the headlines. Sometimes it's doom and gloom stories, market's going to crash, etc., etc. It creates all sorts of uncertainty in the marketplace, and then at the same time, you might hear that the RBA held the cash rate, no more rate rises for the next 12 months, potentially a rate decline. And so conflicting stories, conflicting messages, but this really shows us what's actually happening here in Australia and also on the Sunshine Coast as well. So values are still rising, property prices are still going up. Now, every market in Australia is different, but generally speaking, property prices are still increasing in value. So they're not crashing. They're certainly slowing. We've seen that. So annual growth eased from its peak of 10% in February to 8.8% annually over the last 12 months. Now, these are national statistics. Over the 3 months to the end of May, property prices rose only 0.6%, and that was down from 1.6% in April. So we're seeing different markets across Australia. So Darwin still performing very well, Perth still performing very well, Brisbane also performing very well. Sydney and Melbourne, however, have showed negative declines over the last few months. So down negative 2.1% and 3.2% respectively for Sydney and Melbourne. So you're seeing annual rates, for example, in Brisbane. So Brisbane saw property prices rise by about 19% annually, and over the last quarter up about just close to 5%. So still a lot of good growth happening in our local capital city here in Queensland. And I'll talk about how that's affecting us here on the Sunshine Coast as well. National vacancy rates of rental crisis still a big problem. National vacancy rates sit just under 1.5%. However, you're seeing here on the Sunshine Coast, that figure is about 1.1%. So rental vacancy rates very low here on the Sunshine Coast. And we've actually seen rental prices up 5.9% year on year. So here's some charts for you to show you what that growth looks like across our capital cities. Now, we do see at the moment regional areas still performing better than our capital cities, and that's likely to do with greater affordability and less supply. Whereas Melbourne and Sydney, a lot of supply at the moment down there, and prices are dropping off. I don't have the charts to share with you today, but you'll see across most of our capital cities and regional areas, you'll see the lower quartile percentage of property prices. They're showing the greatest growth and demand, whereas the higher quartile, that top 25% of property prices, are showing a lot less demand and a greater reduction in property value growth as well. There's a bit of a snapshot view of annual growth across the country. So you're still looking at, positive territory pretty much across the board. Brisbane, 19.1%. What's interesting at the moment, we actually have seen more listings come to the market over the last few months. So total listings have risen. And this was quite interesting to me because I've seen the total amount of listings on the Sunshine Coast increase. We're up above 3,000 now. And I feel that time on the market's slowed down a little bit. But however, this is showing the median days on the market for the nation at 28 days, which has come down actually from 30 days in the previous quarter. Auction clearance rates. Now, this is something that I love to look at. However, with an edge of caution, Queensland typically not the auction state, Sydney and Melbourne are. But it does show what consumer confidence looks like and how that might impact us here over the next 6 months as well. Now, previously, auction clearance rates were up at, around the 75% range. It says there 72% peak in September last year. It's now under 60%. So that shows that there's more property availability, less purchasing happening. And so that shows that buyer confidence is probably declined slightly as well. Rental markets, I've sort of touched on that already. Let's jump into and I've talked about this last week in a bit of a reel I did, the total value of property, residential real estate in Australia, 12.6 trillion. Now, of that, 20% is debt. So that's not too bad. There's a lot of wealth in Australia, and this is probably why the RBA and the government don't want to see a marketing crash happen anytime soon, because that obviously affects the economy totally as well. So what it means for the Sunshine Coast, This is really interesting as well. So median house price on the Sunshine Coast, $1.28 million. And we've actually seen, now this is back when I started on the Sunshine Coast in 2019, there were fewer than 20 suburbs that had property median price over $1 million. Now 90 of 95 suburbs have property prices over $1 million. That's 90% growth here on the Sunshine Coast since mid-2020. And currently we've seen annual growth rates of around 12.6% year on year. And their forecast is that we're going to see 10 to 15% growth for the year 2026. So that's my update for you guys. If you'd like this slide deck, let me know. I can send it through to you to have a read of. If there's anything we can help you with, whether you're buying, selling, or just starting to do the research about how to get ready for your next move, please reach out to myself and the team here at Martinuzzi Group. Would love to assist you on that journey, and I hope you enjoy your day ahead.